The RSI indicator could be your secret weapon in day trading, a tool that, when wielded correctly, can help you predict market trends, make better trading decisions, and ultimately boost your profits. The Relative Strength Index, or RSI, might sound complex, but it's far simpler than you might think. For those who are new to the world of trading, the RSI is a momentum oscillator that provides readings between 0 and 100. Now here's where it gets interesting when the RSI reads over 70. It indicates that a security might be overbought, and when it reads under 30, it's a sign that it might be oversold. Now you might be thinking, well, there are so many trading indicators out there. Why should I choose RSI? That's a fair question. Let's take a moment to compare the RSI with other popular trading indicators. Consider the Moving Average Convergence Divergent, or MACD. The MACD is a trend-following momentum indicator similar to the RSI. However, the MACD relies heavily on historical prices, which can sometimes lag behind the current market reality. In contrast, the RSI is a real-time indicator, providing you with up-to-date insights that can help you react quickly to market changes. Then there's the Bollinger Bands indicator, which provides information about price levels that are statistically high or low. While this is useful, it doesn't offer the same level of detail as the RSI about whether a security is likely overbought or oversold. Why choose the RSI over these other indicators? It's simple. The RSI gives you a clear, real-time indication of whether a security is potentially overbought or oversold. That's a powerful tool to have in your trading toolkit. Now, knowing about the RSI is one thing. Applying it to your day trading strategies is another. So how can you do that? Picture this. You're considering investing in a particular security. You pull up the RSI, and it reads above 70. That's a signal that the security might be overbought, and it could be due for a price correction. This insight could prompt you to wait before buying, potentially saving you from a poor investment. On the other hand, if the RSI reads under 30, it might be an indication that the security is oversold and a price rebound could be on the horizon. This might be your cue to buy. Of course, it's essential to remember that the RSI, like any trading indicator, is not all-knowing. It doesn't guarantee future performance, but it does provide you with valuable data that can inform your trading decisions. The RSI indicator is a powerful tool. It's a real-time, detailed, easy-to-understand indicator that can help you navigate the often turbulent waters of day trading. So why not add it to your trading toolkit? After all, in the world of trading, knowledge is power, and the more tools you have at your disposal, the more empowered you'll be to make smart trading decisions. Remember, the key to successful trading is not just about following the trends, but understanding them. The RSI can help you do just that. So don't just trade. Trade smart and let the RSI be your guide. If you found this video helpful, please like, subscribe, and click the notification bell so you don't miss future trading lessons. And if you're ready to accelerate your learning, check out the links in the description below to join my Discord trading bot and Discord trading school. Happy trading!